Welcome to Better Returns, where you will learn how to escape the volatility of the stock market by passively investing in real estate like a pro. 90% of millionaires earned and maintain their wealth by investing in real estate. We will share real-life examples from savvy investors so you can do the same. He used to drink a case of Mountain Dew to pull all-nighters before exams in college. Your host and my dad, Matt Hansen.
Welcome to the show. I'm very happy to have a guest here that I think the world of. He's with one of our property manager, our primary property manager, Luke Leins from ResProp Management. Again, a premier property management company that we love. They're managing our Florida properties right now. They do a stellar job. So welcome to the show, Luke. Glad to have
Matt.
you.
Good afternoon. Good to see you again.
Well, tell us a little bit about your background. I'll promote you guys first off. You manage probably a couple thousand units of mine and my friends at least. You've got about $2 billion, I think, of assets under management. You're focused in Texas and Florida, I think South Carolina. Is that correct?
Yeah. So the 2 billion AOM is, I guess, going back. Our company was founded as a vertically integrated deal shop in 2010. So at our peak as an owner, we had about $2 billion of assets under management.
Wow.
What we did in call it 2018 is we decided we're going to pull back the deal shop and focus on two things: tech investments in multifamily. So we're actually launching right now. I want to say it's 11 in-house prop tech companies. So that's where a lot of our capital is investing. And then the other side of it was in the fee management. And the thesis was being an investor was great for us. Building tech and scaling the third party is going to be great for the industry that did so much for our company over the course of 3 funds and a lot of money under management. So that's really been the goal from 2018, 2019 is ramping up fee management in the tech. And it's a different ball game, but it's been a lot of fun. We get to work with a lot of different kinds of investor and shop. So yeah, it's been great.
Well, that's great. And you have the natural built-in, you've got all these clients or these assets you manage. You can test things out to make sure, okay, it works. I'm sure you do pilot programs on individual assets and things like that and to expand. That's wonderful. Because tech is so important. It really is. It's all about managing the assets, and the more efficient and effective it is, the more profitable it is, and the better the tenants are taken care of. So I love that. I didn't realize you guys you did that as well. We just know you and love you as our great property manager. So
yeah, and you know, as a property manager, we do reap a lot of the benefits of having the tech arm in our company. We have about 200 employees in our Austin office. We moved our headquarters to Austin in the middle of COVID. And probably half of them are corporate ResProp and the other half are startup tech talent. So having those people in the office with us, we're able to do a lot of things very quickly, write our own programs and code. So yeah, that's a advantage of having all the tech guys sitting next door to you.
yeah, that's good. Well, ResProp is the secret sauce to the success of a lot of our deals. The ones in Florida that you guys are managing for us, phenomenal. So what I want to do today is we've got a property called Magnolia Point Apartments in Jacksonville, Florida that ResProp is managing for us. So we're still going through the acquisition phase. So what I'd like to use is this is a case study to demonstrate the value the property manager brings to the deals, and to let our investors know these are the people, these are professionals. They got a tech company. They do all these wonderful things. It's not just, oh, we're buying apartments. The due diligence is so intensive that we want to make sure we're protecting our investors' money. So we're going to use this as a case study and kind of walk through it. So to begin with, my business partner, Ricardo, gets the deal, finds a deal he's interested in. So he underwrites it, which is just a fancy word for economic analysis. But even there, before he puts the offer in, he gets with Luke and says, hey, Luke, here's the asset, here's the financials. Tell me what you guys do with that before we even put an offer in. What do you guys do from the underwriting perspective? How do you help us out with that?
Yeah, definitely. So yeah, the multifamily management space is pretty new. So it's kind of funny to see this industry, which is a very unique industry, managing apartment properties for other people, is a pretty new industry. Really, it came out in mass 15 years ago, 20 years ago. Greystar and Alliance and Riverstone and all these companies started popping up. And then the industry we didn't really know what it looked like, right? So we have a management company. What do I do? What's the service I'm providing to people? And it was always we're staffing the site, we're doing the construction, we're overseeing accounting and all that. But on the business development side, it was really in the last 10 years or so when I think it was Alliance Residential, I used to work there, started doing it first, where they said, hey, we're going to build out a biz dev client services team to support owners on the front end of deals instead of during the hold period. And that really started looking like helping people get to know markets and helping them, let's put together a comp survey. And then the pro forma showed up. So management pro formas started popping up. A management company would say, hey, we'll also do a pro forma on this deal for you, and we'll compare the two. From there, it's really gone further and further. So there's just this, in order to stay competitive in the industry, third-party property managers are just really required defensively to provide a lot of services. So we're doing a lot from market, research for groups. There's a reason we operate in the markets that we operate in, which are Florida, Texas, and now we're in the Carolinas, is because that's where we believe investment money is going to see the highest yield. So that's the first lever is why we're there, and then talking to groups and figuring out where groups want to be. And then once we've identified, like Jacksonville, the market you guys spend a lot of time in, once we identify that market, then we work down into sub-markets. And so we have the macro market lever pulled, and then we're looking at the sub-market levers, which sub-markets are good, which are not. And then on the individual deal basis, we're looking at comp sets, making sure that the business plan is going to make sense in that comp set. And then where we're really valuable, where management companies are really valuable, is in the micro levers. So is there any ancillary upside? Is there expense saving? What's the ROI if we increase our marketing dollars? Things that your average investor with the resources they have, unless they have a huge portfolio, don't have a lot of great access to. So the expense and revenue sides of the pro forma, really, it's best to have a management opinion, just because we have so much more access to data than your average investor, certainly your new investor. So like Magnolia being a great example. Magnolia is in a great market. They have a renovated comp that's down the road that's really proven out the value of that renovation. We know the current management arrangement very well, and we were able to poke a lot of holes in things we could do better, a couple bucks we could save. And it all comes down to, on the management side, we talk about the value of the dollar a lot. So the value of the dollar theory in multifamily is, if you make an incremental dollar per unit per month, that dollar becomes $12 for that unit, becomes at 200 units, $240. More than that, excuse me, 240 times 12, however, a few $1,000s. And that at a 5 cap exit, that quickly becomes 40 something $1,000s. So those little dollar levers, where most people don't want to spend a lot of time, are really demonstrating a lot of A, yield, and B, just that appreciation and exit value is important. So that's where we work, is we're layering in whatever income programs we can, whatever expense savings we can. And it's so much easier for us or a management company to do that, that my advice for anybody, we have great relationships, but in the markets that we're not in, the first thing I'll do, let's say someone's going to Nashville, I'm like, let me help you, or make sure that you find a good management company who's going to spend the same time with you and make sure that they're helping you understand these same things in that market. Because I just heard this the other day, it's not how, it's who, right? It's not how you get things done, but who you have on that team helping you to do it. And so you've got your lawyer in Dugan, and you've got your lender in Brandy or whoever it is, and then you have your management company in whatever market, and pretty soon you've assembled a team of people that are really going to help you just do your job so much more easily.
Yes. So that's just before we even sign the contract. Luke and ResProp takes a look at our stuff. They say, okay, because they're going to manage it. That's what's great about you guys. You take full ownership. Like I'm going to tell you your rents are going to go up this much, or you're going to save this much in efficiencies with water conservations. They've got to deliver on it. So they have a vested interest to give you the best data possible to make good decisions. So that's how we start with, before we even get under contract, we have ResProps take a look at our budget and give us all that input. And like Luke says, you dig up all these little nuggets, like, oh, we could save something here on water, or you could do internet or Wi-Fi and things like that, little things like those, or packaging stations and things like that. So first off, so wonderful. So that's where we got the deal under contract. ResProps signed off, said, yep, this is a good deal. They've looked at the numbers. Now what's the next step? What are we doing next in the due diligence process?
Yeah, then I mean, obviously you guys have a lot going on in that time frame. So really DD is what hits next. And I would say with any management shop of any scale, the DD process is going to be strong. But we're assembling a team of ResProp employees, and we're actually getting onto the site. We're doing a full unit walk. So we're walking every unit, taking an inventory of A, condition, but B, what's in it. So then when we're doing a renovation program, we know what we're replacing and what we're keeping. We're doing a full lease file audit, looking for any discrepancies there to make sure that the financials are true. When we're looking at that rent roll, we do a property-wide deferred maintenance walk. We do full CapEx. We arrange vendors if you're doing pest control or sewer leaks, whatever it is, and then we package it all up. It goes into an executive summary. And really for owners and lenders, that's a big thumbs up or thumbs down, right?
Mhm.
Is this property what was sold to us? Is this property actually going to look like that at that time of takeover? And so that's really that 30-day window. Typically 30 days um, allows us to help really get a feel for what are we jumping into, um, from a time spent effort. What kind of monster are we dealing with? And then on your end, obviously, then that all gets put into the model. So now we have firm bids. We have all of our vendors out there. We've got bids. We've got estimates. So we know exactly what the capital requirements are for the deal.
What's the typically the biggest, I want to say, unexpected thing usually occurs that you consistently see that, okay, wasn't maybe disclosed in the seller's offering materials? What's the most common, I guess, deferred maintenance that you run across that say, okay, they didn't really disclose this and this is going to be the biggest, a big
Yeah,
expense? What typically do you see?
typically. So when we're writing a model, right? When you're looking at a model, you're looking at, it's an 80s deal, and you're looking at renovating units, and you're like, I'm going to put $7,000 in, and it's counters, paint,
Right.
appliances, flooring. What typically we see the most of is things in the unit that aren't a part of that reno scope. So it's going to be, if it's an older deal, it's going to be stab lock or fed pack panels that have to be replaced. A lot of aluminum wiring out there. A lot of drainage issues, piping issues, plumbing issues that wouldn't be expected. So it's really the HVAC issues. It's a
Oh,
lot of a
right.
lot of a lot of dirty HVACs, and they're going to be failing in mass, reaching kind of end of life. So it's typically the things that you don't think of as much as being part of a renovation, but that are popping up as part of just having an older building that you're turning. So yeah, those are the things I'd say that typically show up.
Good, good, good. Okay, so you do the due diligence, you give us the feedback on that, and we'll have to adjust our underwriting based on what Luke says. He may say, you know what, you're going to have to put in, there's a roof here that you need to replace. Here's 100 grand or whatever. So we'll factor in that. So our underwriting will change throughout the deal quite often based on what Luke and his team will come up with, which is great. And that's why they're so thorough. The one of the deals that, well, pre-COVID or whatever, we were doing just an example of what ResProp does. We show up to do, this is the Bradenton deal that didn't go through because of COVID. Luke shows up with a team of 6 people to walk. We had like 80 some units, a whole team. He's got every expert you can imagine. You've got the optimization person. You've got, I think, a Six Sigma person. I don't know, a really technical analytical person. He was really, really impressive. And then you have your construction person and you have your leasing people. They read through every single lease to make sure that it's valid. Is it signed? When does it expire? I mean, it's phenomenal the amount of work you guys do just to make sure, just the paperwork alone, let alone the physical properties. And that's one thing that's very powerful. So we have a good example of, okay, are these 1-year leases? Are they 2-3 month to month leases or whatever they are, because that determines how fast we can turn them and improve the property. So it's
Mhm.
really important that we get that information from Luke and his team, and then we rerun our numbers and hopefully we're still looking good. So that's phenomenal. Okay. So you go through, do all that stuff. We raise all the money, we close the deal. What does the transition look like if you haven't been managing the asset, which in most cases you aren't? I mean, do you guys have many deals that you're already managing and it changes hands? I mean, is that
We
very often or no?
so I guess sometimes it's tough to retain management because there always has to be a new vision, a new business
Right.
plan, and the group who's on it is the one who typically is not able to really give that new vision, because the question is always, why didn't you do it yourselves? On our own properties, so for context, we probably sold 40, 50 deals 2019, 2020 in Florida and Texas. So we sold a lot. We actually had a very good result in staying on the properties that we owned because we had a new team. Our emphasis was third party. We did have visions for these deals, but that vision wasn't always, maybe we didn't want to recap the deal and invest and really do a lot of work. It was just we bought it at a good basis, we ran it well, and now we'll leave a little bit for the next guy. So having a front row seat to what that little bit was, we were in a pretty good position to say, hey, here's exactly what we want to do in this deal. Here's the yield, here are the numbers. No one else knows this deal the way we do, right?
Right.
So we actually had a pretty good hit rate on that. So you had asked kind of what happens from DD until takeover. On our end, you guys are dealing with getting your lenders, raising your money, placing insurance, all these things. And then on our end, it's incredible the number of people who are involved for a management company on a takeover. Because from an owner perspective, you don't see the calls. We probably have 15 people touching each deal.
Wow.
We've got procurement, typically multiple people in procurement, multiple people accounting and controllers setting up bank accounts, multiple marketing, construction, facilities, operations. So there's weekly calls going on, getting your deal ready for you, which is we're building a budget, we're getting our own vendors quoted, making sure that every contract is being reviewed to make sure see if we can spend money. We're interviewing staff, we're interviewing the existing staff, we're interviewing new staff, we're building a new staffing kind of thesis on the property. We're ordering, getting everything ready for a construction project or for any of that deferred maintenance. Budget goes over. And then, day one takeover, our goals always have systems ready. All residents are noticed, we're having a conversation with them. And then the goal is always, if there is a renovation, having that started right away, not waiting 2 months, but really doing the pre-work on the front end. And that's is it a differentiator? Yeah, a lot of groups, you're 4 months into a business plan, and it's a very tight business plan because the market is tight. And it's 4 months in, you haven't renovated any units and you haven't painted the thing. That's really detrimental. Going back to that value of dollar, right? If you're not burning off that loss to lease or achieving those reno premiums on renovated units because you don't have any, that can be a big deal for a business plan. So we're always trying to be fast.
Yes. So what is it looking like? Over the last few years, we've completed a couple apartments and we were challenged to get the renovations done, either labor and materials. So how are you guys managing that? Because I know our investors would really like to know, okay, you say you're going to renovate, 70% of the 227 units at Magnolia. How long is that going to take? And are you big enough that you have the clout, the infrastructure to get those? So tell me a little bit more about how you guys, because I know some of the smaller players that aren't working with big property managers like yourself aren't getting things done because they get prioritized. So how do you guys do that?
Yeah, so on the kind of two pieces to that. On the materials side, we're very proactive. So our procurement team, we actually I get weekly update emails talking about supply for what we need in the multifamily space. So like from the last email, there are still a lot of epoxies that are very hard to get. So we're stockpiling specific epoxies or items that have these epoxies in them because there's a global shortage of these epoxies. Refrigerators we have, dishwashers, GE's dishwashers are on back order. So we're finding alternative dishwashers. So this team is doing everything on the front end because you're right. If you show up on a deal that takes over October 1st and then you say, I'm going to go order these counters, these appliances on October 1st, you're not going to get them. So we're constantly identifying product and pre-sourcing it so that we don't get stuck in that. And is it perfect? No, because a lot of stuff here is not able to find right now. But we've built vendor relationships, and again, it's that proactivity versus reactivity that's been very helpful for us. And then on the labor side, Matt, labor is kind of throughout the U.S. economy an issue, and in multifamily a huge issue. So from staffing these sites, it's very difficult. We've got a recruiting team of 7 people, just trying to get people to come work on our sites because the market is so tight. And so you're leading with the culture first, come work for us. We have to differentiate ourselves in that employer market. And then with the trades, really, I mean, honestly, I talk to people about this all the time. It's a great time to be a tradesman and start a trade and be accountable. And there's no shortage of business for you because it's very hard to find good trades. So our construction and our facilities teams in every market are constantly calling, interviewing, trying to find good vendors. We were talking about, Venice earlier.
Yeah.
Those little tertiary markets are tough. if I were 22 years old, I would move to the southwestern Florida coast and start a renovation company and just do whatever I could because there's just such a shortage. So yeah, we have relationships from GCs, the sole proprietors. You know, sometimes it's guys who have worked with us before have gone off and started their own thing in seeing the shortage and they're doing great, and we know that they're reliable. We can work with them. But no, I mean it's a constant struggle is finding good people to work on these projects.
Do you ever move people from, like, if you've got crew from Texas to Florida or vice versa? Do you have that flexibility to move people around to work on the large projects?
Yeah, all the time. So
Oh, you do? Okay.
we have both markets in all of our markets, including the Carolinas, built as standalone markets, so
Okay.
self-contained. Because I don't want it to rely on a certain uh, on-ground support teammate to have to come in from Austin or from Dallas or from San Antonio, wherever it is. So we have redundancy in those roles in all of our markets. Um, but yeah, when push comes to shove, I mean, we had some of our Florida team out in San Antonio last week helping out, and vice versa. So yeah, I mean that's a good thing about having multiple markets that are in demand markets is we've got staff in either one. Um, so yeah, we do find ourselves doing that pretty frequently.
Excellent, excellent. That's the advantage of going with somebody big like you, that it's not just a small mom and pop property manager in town and they've got limited resources. The fact that you've got all of these experts, the market experts, the construction experts, the optimization experts, and all that. And I love the fact that I know you're more of a strategic guy, being a senior director, but also you talk about the details, which I love. That's what I love about you. Look, like you look at the high level, but then you also make sure that the team is looking at the finite stuff. That, okay, you save $10,000 a year. Well, you compound that by, the cap rate and everything, and you've increased value by, 40, 50, or 100,000. That I love the fact that you guys have that purview of everything. It's not just one little thing. And you're beyond a property manager. You're like a full service. You give us consulting on the markets and all this stuff. So that's phenomenal. It's huge value. Okay, so we've closed the deal. You guys have taken it over. Now, what's the relationship look like between, so one of my partners, one of the general partners is going to be the asset manager, and they're the ones that are going to work with the property manager, because Luke does not want to deal with 5 different general partners on Magnolia Point. He wants one or maybe a backup. You only want to deal with 1 or 2 people. That's the head, the lead person. That's our asset manager. So what does that look like? How do they work with ResProp going forward? And what do the updates look like? Just talk a little bit more about that, please.
Yeah, so through that post DD contract phase is when really my team and I are working closely with our operations team, regional manager, VP of Ops, and kind of handing off our thesis and understanding of the deal to them. And then at the day of takeover, ownership transfers really ultimately from me to that regional manager in the market. So we stay involved, make sure things are going well, but that's when that ownership shifts to them. So they obviously have fewer deals they're working on, smaller portfolios. They'll have a few ownership groups they're working with, and that works out well because they're able to have a closer eye on their deals than I would or than Jordan, our VP, does. So really, that person is the asset manager's main point of contact is that regional manager. And then our goal is always weekly meetings, making sure we have our weekly KPIs and dashboard out, so that we don't want owners are interesting, right? Some owners are so overbearing, they call the property every day, make sure everyone's there, they'll stop by. And then other owners don't exist. They dump money and they're like, I trust you, deal with it. We like a middle ground. If we want to talk once a week at least, we want to make sure that you're tracking on everything that we're tracking on, that there's a good dialogue, because when there isn't, things can go wrong. If an owner is too involved, then we can't do our work right. So there's a good balance. So yeah, it seems to be working out well.
Good. Well, hopefully Rob and Ricardo are somewhere in the middle. I think we probably are. We're not like overbearing, but we're involved. We want to make sure we're involved. So what are the key performance indicators that you guys are looking at? What are the key numbers on a weekly basis our asset managers looking at with you guys?
Yeah, I mean, so the main metrics are residents. What are they doing? Are we touring? Are we signing leases? Are people moving out? If so, where are they going? And from that data, you get so many more points, right? So if people are renewing, if we're renewing 80% of our tenants, well, maybe our rents are too low. Our renewal rents are too low, and we're not freeing up enough units to renovate if we're renovating. So then there's all these levers that come from behind that, which is part of the conversation. Is here are those key metrics, and here's how that affects our business plan. So it could be a price adjustment, it could be something we're going to change of how we're marketing more, marketing less. So there's a lot of discussion that's built out of those, and beyond that, really just tracking like key expense numbers. Are we keeping expenses in control? Collections has been a huge one, right? Collections has been enormous. So collections and evictions exist on every property. So making sure that we're tracking those and that there's a solid business plan behind any delinquency or evictions are being taken care of swiftly. So it always comes from qualitative, and the conversation ends with a quantitative output.
Excellent. Excellent. What do you see like the retention rate on average, just ballpark, that people that renew their leases? Is there, I don't even know. I should know the answer to that. What's the number? Is it 30%? Is it 50% on average?
Historically 50. Historically 50. It went up a little bit in COVID, and it's actually stayed pretty high for the most part. But typically the target is 50 because you really want to have new tenants coming in paying those new rents, and then but you don't want to be turning off. So 50 is a good number. 50 to 60% I think is a good target. Anything above that, and you're probably not pushing hard enough. Anything below that, and something's off. People are going somewhere for a specific reason. Do they not feel safe? Do they not feel like their apartment is nice enough? The amenities are nice enough? Is there a better option down the road that's undercutting you, whatever it may be? Is it marketing? So yeah, it's I'd say 50 to 60% is where I like to see them.
Okay, that's pretty good. That's pretty reasonable. And I had a follow-up question to that, and I forgot because I was listening to you. What was it? Oh, moving from, and I know this happens a little bit. So we're renovating units, and how many people jump from one unit to another if it's renovated? Is that keep people or not? Or you're pretty much getting a new clientele when you renovate and the rents go up a couple $100? What did you see?
Typically, when you have classic units and you have renovated units, typically the person who's already there, they're already in the unit. They don't want to move. They're comfortable. They've gotten used to their unit. So you don't see a lot of people who choose to jump from a classic to a reno on the same property. Typically, those renovated units are largely going to be rented by new tenants.
Gotcha.
And the new tenant is more likely to rent the renovated unit than the classic unit. Obviously, depending on numbers, that renovated unit is going to be more attractive to somebody who's new to the property.
Yeah, typically we're not going to really offer a lot of classic units typically, unless we're behind in the reno for supplies and things like that. Then okay, that's very good. Very good. Okay, those are all. I think. Is there anything else? Okay, our case study, Magnolia. You've walked us through the. You guys are involved before we even make the offer. You guys are involved, and you give us the thumbs up or thumbs down because I know you guys will say, you know what, this is the testament for how good you guys are. This was years and years ago. My partner was using a different property manager and I wasn't really happy with them. So I went to you and you took a look at the pro forma and said, Matt, no, so I went back to the other property manager. Listen, this is what we need to do. So you guys are that good and now of course we're locked and loaded with you guys. You're a ride and die. You guys are fabulous. But I know early on we were using somebody else before we kind of discovered you. And it was and you guys still took the time to give us the pro forma, and you knew the market better than the other company did. And that's why we felt like, okay, we really need to get your opinion. You guys just were so forthright and just giving us and it was really good. And it worked out well. We've recently sold those properties, but it was partly because of you guys that gave us some additional input. So we appreciate that.
I appreciate that.
Yeah. Anything else you want to share about ResProp or anything?
No, we try to be honest and forthright. And actually, something I'm going through right now, which I think it makes a lot of sense in this conversation, is I've traditionally been an equities guy. I've spent a lot of time in the stock market, and then lately I've been having a lot of trouble. Right, so I'm thinking, where do I put my money? Stock market's been really interesting lately. I bought a few Bitcoins recently. I know you're into crypto, so I was like, I'll put some money into crypto. I've actually. It's funny, having worked in multifamily, I've been in traditional multi for, I don't know, 4 or 5 years now. Before that, I was doing some senior stuff and some multi-finance. I've actually kind of found myself coming full circle. And as I was looking, I was like, okay, I'm not super interested in a lot of the equities markets. I don't want to buy a ton of Bitcoin because I still don't understand what it is. I've actually found myself circling back to multi. I kind of solved my own question with what I do because multi, the economy is in an interesting place right now, and I know capital's been kind of interesting, but multi has been really strong. And looking at these deals like Magnolia, it's a multi-lever deal. Um, I'm like, these are great deals. This looks a lot better than the other alternatives. So I've been throwing some money into some deals that we've been just looking at. So it is a good time. It's scary to get into multi. So I always tell people, find a couple of sponsors you like and throw a little money into each so you can learn from them and kind of start seeing like the things we're talking about, looking for those different levers, seeing what your lead sponsor is doing. But yeah, I mean, just a note, it's funny. The market's been a little more volatile, a little tighter, but I still found myself coming back to it, kind of personally. So it's a good time to be in multi. I think that the industry is going to do really well. And this is a dude who invests money, not as a guy who works in the industry. But no, seeing guys like you and Ricardo and all the Think Group we've worked with, having the outcomes they've had on properties. It's like, man, if you can find a good sponsor that you really trust and do deals with, you can do really well. So it's been a lot of fun seeing that.
Excellent, excellent. And, it's always interesting to talk to commercial brokers, the people that we buy the properties through, and you'll ask, "Oh, do you invest in multifamily?" Or, I don't think I've met one that invests. I'm getting, okay, you're selling these $40 million properties, you're not investing, you're not part owner. It's surprising that. So, but you're an example of somebody that, okay, I know this business, I know it really well. I don't understand Bitcoin, but you bought some, which is good because I think someday that's gonna be worth tons. But anyways, but you're saying going back to something you really know and understand, and you guys do. You are our secret sauce to why we're successful in a lot of our deals, the deals that you guys manage for us. So I think that's great that good testimony is that some of your money out of Wall Street and put it into Main Street and apartments like this, particularly
That's
passive
right.
investing. It's you sign a piece of paper and wire some money and you're done.
Yeah.
I mean, and then it's your job to make us money, Luke, and you do.
Yeah, that's right. That's right. Then it comes down to us.
Okay, well, we're coming to the end. I've got a rapid fire 5. These are fun questions.
Okay.
Okay, just what comes to your answer in your head. Okay, this is a simple one. You know this one. What city do you live in today?
I live in Bradenton, Florida. That was
Very
an
nice.
easy one.
That was a gimme. Okay, what's your favorite vacation spot? I know you and your wife love to travel. So what's that?
Oh man. So I've got my map back here of all the places I love. Italy is hard to beat, and there are 3 or 4 countries in Africa that I could just go back to over and over again. Probably, namely Uganda. So
What's your
probably my
favorite
2
city?
favorites.
What's your favorite in Italy? What's your favorite city?
Traditionally, I'm a Florence guy, but we had so much fun in Rome. It was my 3rd time in Rome. We went back in June. We had so much fun in Rome, so much fun in Florence. We were on the Amalfi Coast. You can't go wrong with anything in Italy. It's the whole country is just so beautiful.
It is. It's fabulous. Great. Okay. Are you a morning person or a night owl?
I'm both. I'm a morning person because I have to be. I'm a night owl because I like to be.
Okay, so your natural tendencies
I'm a
is
natural night owl.
you're a night owl. Okay, like
Yep,
me. So I
yep.
knew that's why I liked you, Luke.
That's right.
Okay, very good. If you could eat only one food for the rest of your life, what food would that be?
A ribeye steak and like a rice pilaf and some broccoli.
That sounds good. You sound like a Midwesterner, though. That's a Midwestern meal. That's something
It
I
is.
would love.
It
Okay,
is.
that's very good.
I'm from Colorado. There's a lot of good meat in Colorado.
Yeah, that's true. That's true. Okay, the final question. What song would you sing at karaoke night?
What song would I sing at karaoke night? A buddy and I did the song from Grease, "Summer Lovin'." I was John Travolta and he was Olivia Newton-John. So I'll go with that one.
I love that. That is one of my favorite movies too. My wife and I have probably seen it 50 times. And
That's great.
it hurt a little bit when Olivia Newton-John passed away a week or 2 ago. So
Indeed.
wonderful, wonderful.
Indeed.
Well, Luke, it's an absolute pleasure to have you on the show. I really appreciate it. And I appreciate what you do and the value you bring to myself, my business partners, and all of our investors. You are incredible and your company is wonderful. Can't give props for ResProps. So how can people get in contact with you and your biz?
Yeah. So I'm on LinkedIn. Luke Leins is an easy way to connect with me. And then on our website, I should be on there, but my email is LLEINS at respropmanagement.com, RESPROP management.com. So yeah, anybody who's curious or just wants to chat, I like talking about real estate. You mentioned me still being involved in deals. I'm involved in deals because I like the people I get to work with, and I like still talking about real estate. So yeah, very open to just chatting markets, talking about whatever. So yeah, no hesitation. Please reach out.
Excellent. His contact information will be in our show notes as well. So I want to make sure you have access to this excellent talent here. So thanks again, Luke. I really appreciate your time. Have a great
All right,
day.
Matt. My pleasure. We'll talk to you
See
soon.
ya. Bye-bye.
Bye.
And that's a wrap. Thank you for listening to Better Returns, brought to you by Hanson Holdings. If you enjoyed this episode, please leave a 5-star review because it helps others discover this valuable content. If you would like to earn truly hands-off passive income, go to hansonholdings.com, where we help you invest in large apartment complexes to grow your family's wealth. See you next week with another awesome episode. Have a great day.